Hi everybody, welcome to Christensen Wealth Management. I'm Michael Christensen. Thanks for taking time out of your day to watch the stock market update and industry sector review for the week beginning Monday, April 23rd, 2018. Before I get into the Dow Jones, S&P, and Nasdaq charts, I would like to begin with the quote of the week. This week's quote is from Andre Gide. I believe I'm pronouncing that right. Andre Gide was born 1869, died 1951. He was a French author and winner of the Nobel Prize in Literature in 1947. Andre Gide once said, "One doesn't discover new lands without consenting to lose sight of the shore for a very long time." Those are some very wise words from Andre Gide. Well, the volatility continues. We just every day don't know whether the Dow's going to be up 200, down 400, or up 300. Who knows? But we have gone sideways for the past week between the last video and this one. I'll go ahead and jump into the charts, and I'll begin with the Dow Jones Industrial Average. Before I begin, I'd like to say that all the charts you're about to see are 6-month charts beginning on October 23rd, 2017 to April 23rd, 2018. Looking at this chart of the Dow Jones Industrial Average, we currently have the red 5-day moving average above the blue 20-day moving average, indicating some short-term strength, but the blue 20-day moving average is below the purple 50-day moving average, indicating intermediate-term weakness. So some caution is still warranted because both of those indicators are opposite of one another. One says strength, the other says weakness. And the Dow Jones Industrial Average actually hasn't gone anywhere since April 6th. So it's been a lot of sideways movement, which is a significant sign of indecision. So we need a little more time to see what's going on here, and the week of the 23rd of April will probably tell us a lot. A little more detail here on what I'm looking at. If you connect the highs, like I've done in prior videos, starting with January 30th and going on down, what you see is the high of January 30th lines up with the high of February 28th and the high of March 13th. And the high of April 13th. We tried to break it on this. We tried to break that declining blue line there on April 16th, but failed. And we finally broke out on the 17th, rallied up, and then 4 days to the downside. So what we're doing is we tried to break this declining blue trend line 1, 2, 3 times. Finally did. And now the price of the Dow Jones is coming back down, and for 2 days in a row now has tested that blue line from above to see if it's going to hold. If it does hold, we haven't had any reversal of direction, so the outcome is still unknown. But if that blue line does hold and we start heading higher, then the Dow Jones Industrial Average could head to all-time highs again. But if this declining blue trend line fails and the Dow falls back below it, then that could open the door to much lower prices for the Dow Jones Industrial Average. So give this a few more days to play out a little bit so we know which direction this may be headed. So just use some caution for now on the Dow Jones Industrial Average. Here we have the chart of the S&P 500 stock index, and you can see that the red 5-day moving average is above the blue 20-day moving average. So we do have a sign of short-term strength, but the blue 20-day moving average is still below the purple 50-day moving average, and that is a sign of intermediate-term weakness. So that tells us to remain cautious because those two signals oppose each other. One says strength, one says weakness. And one of the other things that I am looking at on this chart is if you connect the closing highs of each of these dates, then you can see they line up pretty well. So the closing high of January 29th up here lines up with the closing highs of March 12th and March 13th, and then as well on April 19th. So that declining tops trend line has not broken yet. It is still holding. So the question is it going to break above it like the Dow Jones Industrial Average? And if it doesn't, then that could certainly open the door for lower prices for the S&P 500. So right now, we really have a lot of indecision on the S&P 500. So I will just say remain cautious for now and give this a few more days to play out and give us a better sense of direction. Here's the chart of the Nasdaq 100 stock index, and currently we have the 5-day moving average in red is above the 20-day moving average in blue, signaling some short-term strength, but we do have the blue 20-day moving average below the purple 50-day moving average, indicating intermediate term weakness as well. So we have two opposing signals there. So again, remain cautious on the Nasdaq 100. And the price of the Nasdaq is actually below the 5 and the 50-day moving average. So there is a lot of indecision and some weakness there in the short term. So right now, though, what I'm looking at is whether or not this thing is going to make any sort of attempt at a higher high. We have a high, a higher high, and then it all fell off the cliff here in March and then rallied up, but it made a much lower high than the prior two. So that is significant weakness in the Nasdaq 100. So just remain cautious. Give this a few more days to play out. This is a very weak index, and it's full of technology stocks, and we have a lot of technology companies coming out with their earnings in the next week. So that should move this index one way or the other. For now, again, just remain cautious. Here we have the chart of the S&P 500 Information Technology Index, and right now we have the 5-day moving average in red is above the blue 20-day moving average, indicating short-term strength. However, that strength is starting to fade as this 5-day moving average is rolling over and beginning to converge again on the 20-day moving average. So we have some short-term weakness that is building, but right now it's still a strength indicator. The 20-day moving average in blue is below the 50-day moving average, and that is a sign of intermediate term weakness as well. And you can see that the 5 and the 20 and the 50-day moving average and the price in black are all just woven in among each other, and that is just a sign that there is a tremendous amount of indecision here with these technology stocks. So just remain cautious on this particular index. There is one possible bearish pattern forming here, and in the world of technical analysis we call it the head and shoulders pattern, because you have a left shoulder here and then a head up here, and then a right shoulder over here. And if this is a head and shoulders pattern, then that will result in lower prices if it does in fact come to fruition. So with that pattern kind of sitting out there to look at, and the amount of indecision here with these moving averages and the price, again, I would just use extreme caution when it comes to this technology sector until we get some more sign of strength sometime, whether it's sooner or later. You just remain on the sidelines and just kind of watch and wait and see what the rest of the week brings for this technology sector. Here's the chart of the S&P 500 Consumer Staples Stock Index, and this particular sector just cannot get out of its way still. Week after week, it's just been continuing to take a beating. We had a low here on March 26th, followed by a rally up to April 18th, and then boom, the floor just fell out of it once again. So right now we have the 5-day moving average in red rapidly dropped back below the blue 20-day moving average, indicating a very strong amount, or I should say a significant amount of short-term weakness. And the 20-day moving average in blue has been below the purple 50-day moving average now for a couple months, indicating intermediate term weakness. So lots of weakness in consumer staples. So continue to use some caution here, or I should say a lot of caution, until this thing is done falling. Right now it has just been a long road downward since January 29th for consumer staples. Here's the chart of the S&P 500 Industrial Stock Index, and we have the 5-day moving average in red is above the blue 20-day moving average, signaling short-term strength, but the 20-day moving average in blue is below the 50-day moving average in purple, indicating intermediate-term weakness. So with those two opposing signals, I would continue to use caution with the industrial sector. One other thing that makes me say use caution is if you connect the tops of the closing highs here, you will see that the industrials has not broken out of its declining trend. The high of January 29th lines up nicely with the high of March 12th, which lines up with the high of April 19th. And the price was rejected again on the 20th and the 23rd. So continue to use caution until we get some more strength indicators out of those moving averages and we're actually able to break above this declining tops trend line in dark blue. That's for the industrials, so continue to use caution. Here's the chart of the S&P 500 Utilities Stock Index, and this one continues to just calmly float in the upward direction, which is a nice thing to see after that long drop from December down here to the low of February 9th. It has been a nice, steady, pretty calm uptrend. And you have the 5-day moving average in red is above the blue 20-day moving average, indicating short-term strength. And the blue 20-day moving average is above the purple 50-day moving average, indicating intermediate term strength as well. And we also have a very nice parallel trend channel pattern. If you connect these lows, you have a nice straight line there connecting those lows of March 8th, March 26th, and April 13th. And you also have this very nice other parallel trend line up here that lines up very perfectly with some of those other highs. So one high here, 2, 3, 4, and 5. So right now it's in a nice rising parallel trend channel, and both of our indicators are showing strength. So right now utilities is calmly moving in the right direction and looks pretty good. Here's the chart of the S&P 500 Consumer Discretionary Stock Index, and we have the 5-day moving average in red is above the blue 20-day moving average, indicating short-term strength. But the 20-day moving average in blue is below the purple 50-day moving average, indicating intermediate term weakness. So we have two opposing signals there, so that would tell me just use caution until we can get a little more information out of this particular discretionary or cyclicals index. We need it also to break above its declining trend, which it hasn't done yet. And if I connect these highs, you can see that we have the closing high of January 29th lines up nicely with the high of March 13th and the high of April 19th. So the discretionary index has not broken out of that declining trend, and we have an intermediate term weakness signal. So give it more time to show some sign of strength before taking this sector seriously. Here's the Dow Jones Financials Stock Index, and we currently have the 5-day moving average in red is above the 20-day moving average in blue, indicating short-term strength. and that would be warranted after this rally that we've been having since about March 26th. But this rally is slowly converging into a more and more narrow pattern, so that is a little bit concerning to me. But I will just keep an eye on it and continue to use caution, partly because of this converging pattern you're seeing with this the black line here, which is the price. It's getting smaller and smaller as it's going higher, and that can be a bearish sign or a sign of future weakness. As far as right now, though, the 20-day moving average in blue is below the purple 50-day moving average, which does signal intermediate-term weakness currently. So we have short-term strength, intermediate-term weakness, and a converging pattern here. So I would continue to use significant caution with the financial stock index at this time. Here's the chart of the Dow Jones Oil and Gas Stock Index. Also, you could call it the Energy Stock Index. And right now we have this explosive rally that took off about April 10th. And the 5-day moving average in red is rapidly rising above the 20-day moving average in blue. So we have a short-term strength indicator and lots of strength at that. Those two lines are pulling apart from each other. And the 20-day moving average in blue is above the 50-day moving average in purple, indicating intermediate-term strength as well. So right now, we have a significant amount of short-term and intermediate-term strength because of this rally. The one thing that does concern me, though, is that this rally was so fast. It has really exhausted a lot of its energy going from down here to up here in about a week or two. So I'm going to keep an eye on that. But right now, hey, we have short and intermediate-term strength, so things are looking pretty good for oil and gas, and we'll just see where we go in the days ahead with this one. Here's the chart of the Dow Jones Healthcare Stock Index, and currently we have the 5-day moving average in red is above the blue 20-day moving average, indicating short-term strength. However, the blue 20-day moving average is below the purple 50-day moving average, indicating intermediate-term weakness. So those two signals oppose each other, which gives me reason to remain cautious. One other thing that I know that I'm looking at that gives me pause is if I change this chart from a line chart back to a candlestick chart showing the high, low, open, and closing prices for each day of this particular index, and you connect those highs, starting with the high of January 30th, and you come on down and connect those highs of March 14th and March 15th. We broke out above it, but now we went right back below it. So that is a sign of weakness because we broke above that declining trend line, but then failed immediately. And for 3 days now, we have been sitting underneath that declining trend line. So just remain cautious with this healthcare stock index until we get a solid breakout and get that 20-day moving average to get a little bit closer to that 50-day moving average. Here's the chart of the Dow Jones Real Estate Stock Index, and currently we have the 5-day moving average just peaked back below its 20-day moving average. So we have short-term weakness confirmed, but it's really been back and forth sideways for weeks now. There's just rather a lot of indecision, which is a sign of weakness, I suppose you could say, but right now lots of indecision and weakness for the last couple weeks. And we also have the, we do have the 20-day moving average in blue is above the purple 50-day moving average. So that tells us that we do have just a little bit of intermediate term strength here. So really nothing going on. It's just a sideways movement, no movement to the upside or downside. So I would err on the side of caution until we see something better out of this particular sector. Here's the final chart of the day, the Dow Jones Transportation Stock Index, which is full of airlines, railroads, and trucking companies. And you can see on this chart that it has been in a sideways movement since the first week of February. It has no real strength nor weakness, just a lot of indecision. But looking at our moving averages, we do have a short-term strength confirmation because the 5-day moving average in red is above the blue 20-day moving average, but the 20-day moving average in blue is below the 50-day moving average in purple, and that's a intermediate term weakness. So opposing signals there tell me to be cautious, especially because we have this continuing sideways movement with no sense of direction. And if you want to connect the highs here, you can see that we're still stuck in these sideways parallel lines. The index just does not want to break out of it yet, and we really need to wait and see whether this particular sector breaks above its parallel channel of those blue lines or breaks below it, and then we can move on and get a better sense of where this thing is going. Thanks for watching this market update. I hope you found the charts and information useful. Before you go, please click the subscribe button on this YouTube channel and then click the little bell next to it. That way you'll be notified whenever additional videos are posted. And in the summary description of this video, you will find links to the Facebook, LinkedIn, and Twitter pages for Christensen Wealth Management. And if you use any of those social media sites, please visit them and like or follow the Christensen Wealth Management page while you're there. Well, have a great day and a great week, and I look forward to talking to you in about 7 days. Bye-bye.